And in today's session, I'll go through some stocks which we traded last week. So I'll show you what we did and some stocks which are setting up and the market's analysis, what the market did, what the market could do, and what are the market's key levels. All right. So let me go on a full mode. I'll skip some slides. I won't cover some theoretical topics. I'll just skip to the charts, and I prepared some two additional slides. So I'm going directly to that slide to show you. So you should be seeing this slide. It's called 4 stages of a stock cycle. I have written an article on this topic. It's called Life Cycle of a Stock, in which I've described. I wrote about 5-6 years ago. And usually you get it through email or it's part of a guidebook, the option trading strategy or the trading system guidebook. It's there. But I want to explain to you a little bit. And then we move to the stocks analysis. So stocks or any like economy or goes through those stages, right? There are 4 stages of economy. There are 4 stages of a stock. So this is what I'm trying to explain to you through this chart, and I have another slide. I'll explain more in details, and then you can go into more details at what to do at each stage of the stock by identifying first at what stage the stock is. So once you know at what stage the stock is, and then you look for the clue. And when look for the clue that this is what's happening and your analysis is right, and then you look for the confirmation. So when the confirmation comes, then you act upon it, and then you adopt the strategy based on what the stock is doing at that stage. So when you get your first clue, if you're an aggressive trader or investor with deep pocket, you can take action at that time, but then you may have to wait, or you could be wrong. But ideally for us, we need to act when the confirmation comes. So for example, this is the 4 stages of life cycle, the stock cycle. So this is the stage 1. So just think about this stage 1 is at the bottom. So the stock is just a stage 1. This is what this stage looks like. It's at the bottom, it's basing. So there's a broad base right here. And suddenly then one day you wake up and then there's a news. So it's a positive news, and then the stock moves upward. So due to the positive news, the stock starts moving upward, and then it keeps just going up and up and up. Pull back, then up, then pull back, then up. So it's constantly moving to the upside. There is a life cycle within this stage. Stage 2 has its own mini life cycle. So it comes down, forms a base, then go up. Then it comes down, forms a base, goes up. Then finally, when everything is over, this is where the retail traders come in. This is where those who realize that the stock has a good news, they come in. This is where the deep pocket people, those who believe in fundamentals and know that the stock will eventually move up, they are buying it. So this is where ideally money is to be made at this level when the stock breaks first time, and then it just keeps going up, and you're riding it if you have shares or you have calls, etc. So you adopt different strategies at this stage, and then finally the stock reaches the peak, and then it just stops. So it starts showing like indecision. So indecision happens, and the stock goes sideways. Sometimes it's evident, sometimes it's not evident. It fools us. It does the false breakout, and the last traders, they get in, and then some bad news comes or the market reverses. The market in general is going down. There's nothing wrong with the stock, and then the stock starts collapsing. So stage 4 is formed, and then the stock just keeps going down, down, down. It completes its cycle. This bottom could be lower bottom. This bottom could be a higher bottom. So then we say it's a double bottom. etc., or the right shoulder. This is the left shoulder. This is right shoulder. So all this happens, and then the stocks starts moving up again, forms the base, and then the game is played again. So a lot of stocks do that. So this is what the stocks are doing right now due to the market or whatever could be the reason. So a lot of stocks are going through this stage. So we can divide these stages further. So this is the stage. You can divide further. Indecision, high demand. So this is the indecision form, where the stock is stage one. There's a bottom formed, and there's a tussle going on between buyers and sellers. So we don't know who will win, either the buyers or the sellers, the bulls or bears, because the stock. We think the stock is forming a base, but it can easily collapse on some news. So it can just come down right this way, or if the stocks finally tries to break out, it will break out, and then the demand forms, and people starts buying it, and then the greed. Everybody start chasing that stock because it's mentioned in the CNBC, Bloomberg, etc. Everybody knows about this stock, and finally euphoria, and then nobody is buying it. So the big boys bought here, or they bought right here. The retailers they bought here, and then the stocks just tops out, and then finally, it just crashes. So the fear sets in. So when the fear sets in, those who bought here, they start selling. Some they buy because of they think as a dip, buy the dip. So they start buying it, and they try to support at this level. So, but then if the sellers are more than buyers, then finally the buyers gave in because there's nobody buying it, no buyers left, and then finally the crash happened, panic sets in, and then the climax downfall. So heavy supply. So this is where when the sellers are gone, there's no sellers, no buyers, so the stock goes through this stage. So stage one is repeated, and the cycle goes on and on and on. So same any cycle. So this is the basic life cycle of a stock. So at different stages, you can adopt a different strategy, and at different stages, you can identify to to look for the clue and the confirmation. What is actually happening? What kind of technical analysis you can do to identify this stage, that stage, and then final collapse. All right. So let's go into this Apple. My long-term target of Apple is 200. So I have mentioned before, but it's not happening right now. It's the other way around. But 200 is a long-term target. So there are long-term targets, and then there are the stock deviates from its path, and then the stock comes down, then it reverses, but the long-term target remains intact. So the 200 is the long-term target of my Apple. So Apple on 21st of March set on the 50-day moving average. That was the bulls area. Now it's just falling, and this is what's happening. So Apple could drop. John asked me about the Apple. What do you think? So Apple right now is in going towards 200-day moving average. So 162. So 165 right now and 162. Now, a lot of stocks reaches some critical level, right? When the market is also reaching the critical level. So there's coincide. So NASDAQ reaches some support, and Apple also reaches at the same time. So whatever is the support level for NASDAQ, I'll show you the chart and give you the support levels. It's way below right now for NASDAQ. It broke all the support. It's only one support left, which is a long-term support. So if that is broken, then the bear market starts. So a lot of key stocks may hit the support right at the time, and then that's where they start buying the stocks. So when they start buying the stocks, then in indices it starts moving. So there could be a coincidence. So I'll talk more about it and show you the chart. So Apple for now is going to 162. This is BABA. So due to tariff and all that, the BABA starts showing sign based on this right now. This candle on 19 March we traded puts, and the reason is this is the exhaustion. It gapped up, but then there were nothing happened. Next day, this candle didn't take out the high. So this is still again not a buy signal. And then the third day, this is what it gives. First time it gave the clue that Baba wants to come down, and it did come down. And next day, so we were short on Baba. We covered on the same day. So we bought puts and covered on the same day because Baba was resting at this the resistance line, which was resistance line was support. So we said, okay, Baba, we need to exit. And so next day, see this, the reaction, the white candle. So the exit was perfect. The Baba did move up, but again, Baba had to move above this candle to give a buy signal. But the next day there was a counter attack. So you see this candle, red candle, this opened right at the close, and it did not go up. So it's called tweezer top. So this is the reaction the Baba gave. It's very bearish. So again, we bought puts on this reaction because whatever there was a up move here, it was nullified, and this is the bearish move. So it is safe to it was safe to go short on Baba again, knowing that okay, our stop is above 200 right here, and this is what happened to Baba. You see the collapse. So now Baba is sitting, it has a support at 175, 176 level, and so I'm trying to tell you the reasoning, the logic of Baba trade. So somebody said, can you show us how to identify the short trades? So this is the way I identified. First, I went short based on this candle, right? And then later it built. So it was 9:48 a.m. So I said, okay, let's buy puts. And then later the same candle become like this. But when it started bouncing up, we got out because this is the support. It was a resistance which became a support. So we said, okay, Baba, we need to get out. Then there was a counter attack. Okay, it looks like they are buying it. But the third day, no, they're selling it. And this candle opened right at the close of the previous white. So this is a clear negative sign. You can go short. You can put the stop right above this. So when you see back to back, you need to take action. And this is the collapse of Baba. So this was the reasoning, and it could easily drop to well. This support, it doesn't mean anything. It doesn't mean that this is the support and it will hold. Anybody can break the support. Big boy, anyone who has 1 million, 2 million shares to sell and come tomorrow on Monday, they can break the support. It's not nothing written in stone that this will hold, but you just know that okay, this could hold like 176 level, and 173 is the 200 days. So next is 173, and this can also be broken. Nobody says the 200 days should be maintained. It can easily come somewhere here. Who knows where? There's a gap here. So if you take the line here, 176, the window will be closed at 176. The Baba can easily drop to 176 if it wants to. 176, it can come. So the next is Boeing. So we traded Boeing puts, made money on Boeing. Then again, I keep showing you the hammer. So when back-to-back hammer, so we got out of Boeing puts, and LMT also was falling, Boeing was falling. Then this, so we exited based on the reversal to the upside. We said, okay, exit. Then back-to-back hammers start forming. You see higher, higher, higher. So they are buying it, right? So you can easily say, okay, they are buying Boeing right here because once this low is formed, it's not getting violated. So if you want to go long, you can go long, and your stop is below this first low. So we went long on BA again on this, and this is what happened. See the BA, it starts moving up, went up. So third day in a row, The rule is if the stock moving 3 days in a row, you need to take profit, majority of the profit. So either 3 day, 5 day, 7 day, these odd numbers. So there's something magic about three numbers. Three is the key. So 3 day in a row, the Boeing moves, it would be foolish not to take profit. So we exited. And it's bumping its head on 50-day moving average. This is another sign that it can easily drop, and the market is bearish. So when you combine all this, market bearish, 3 day move, a lot of negative news, tariffs, this, that, you need to sell. So, okay, just a second. I think I didn't prepare the chart. So BA fell again. I don't have a chart for that. It's 23rd, 21st. But then on Friday, it was moving up. That was the only stock, this defense stock, BA and LMT, they were moving up. So BA rebounded from this level. So 320, 321 is very good support for BA. So if you look at BA, it fell on Thursday, but Friday it was moving again, and same with LMT. Now this Baidu chart, again, this is the clue. So for you, Stan, so this is the clue. It formed this doji candle, which is the indecision, and then after that, Baidu fell. So this was when I saw this gapping down below 50-day moving average. When a stock is gapping down below 50-day moving average, you can take action by going short. So take action going short on a bearish day. If the stock gaps down below 50-day moving average, it cannot be simple than this. So Thursday, market is bearish, stock gaps down. It's a China stock. We all know that, right? So it's China stock. We are having problem with China. It's gapping down below 50-day moving average. So you go short. This is your target right here. So this is what happened. It can come down further because this is one little more bad news. It can break easily to 200-day moving average and comes to 220, 221. This is your support right here. This is the support. So you need to, when you are looking at the chart and you want to find out where is the support, you go left and you say, okay, is there any hammer candle? Yes, there is. So where is the hammer? Oh, here it is. This is the support. So don't fight with the hammer because it can kill you. This is where the buyers are, so they can come back again at 210, 211. So don't go there. And this is the window which is almost getting close. So right here, but it can easily fall to 220. So keep an eye on Baidu. It can fall to 220, and if it wants to, it can fall to 208. This level. This is the low of the hammer. Call. So crude stock, the way I trade crude stocks, I look at the crude chart. So if you want to trade crude, you need to look at the crude chart. Crude futures is very important. So any commodity related, you need to watch that commodity. If you're trading gold stock, you need to watch gold futures. If you're trading crude, you need to watch crude futures. You cannot, it just because it gives you heads up. If you think crude will go up, you keep an eye on the crude stock. So which crude stocks? Your favorite one, like COP, CVX, Exxon, Schlumberger, whatever, 4 or 5 top stocks. Some stocks, they're not moving, so there's something wrong internally, fundamentally, like XOM is not moving, so something is wrong with that. We don't know. So you can do your fundamental analysis, but the chart saying it's not moving right now. COP is moving, so COP was moving and we were long and we exited with profit. So this is a very bullish candle. It shows that it can go up further. And the other crude stocks were moving also. On a bearish day, the crude was moving and COP was moving. EAT, I prepared this. Again, this is another stock. It gaps down heavy with a heavy volume. It's sitting right at 200-day moving average. It broke 50-day and 200. So it just sitting at 200-day moving average is like temporary support. 200-day moving average doesn't mean anything. It can break. A lot of stocks do trade below 200. So how they trade 200-day below 200? Because they broke that 200-day moving average, right? That's why they are trading below 200. So this can easily break 200 and comes down to 33 because this is where the support is. So it can easily come down here and rest. So keep an eye on EAT. Another one is EOG. This is another oil stock, same as COP. So EOG is still strong. It was going up on Friday. So crude is moving up, EOG moving up, COP moving up, and some other stocks moving up. So crude, EOG broke this um, resistance. It's on 21st of March, and it was still going up on 23rd. Yeah, see, 23rd is still going up. So crude, on a trade crude stocks, watch the crude chart. And the news comes out at 7:30, inventory level, etc. So you watch that, see the reaction, and get in. F5. So now I want to show you F5 chart. F5 is not falling. For some reason, it's just not falling. Even though market is bearish, it's just not falling. So this big bar is very bearish. But on the side, is indecision going on. So it goes up, it comes down, goes up. All these candles, these are indecision candles. So the buyers and sellers, they are fighting right now. So what happened next? My bias is to the downside right here, 143 level. It can easily go up, but when we are wrong, we have a like point of reference where we are wrong. This is the point of reference. This kind of 150 and plus change, 150, 80, 150, 85 plus is the point of reference for us to say that F5 wants to go up. Otherwise, it can easily come down. So once it break this, it's 143. We could easily see 4.5 points drop towards 143. So it's not happening right now. F5 is holding its ground. Okay, so this is the 22nd of March. Sorry, I was showing you the chart of 19 March. Okay, so 19 March, and this is 22nd of March. So it's still, you see this candle? It's still bearish. Guild. So Guild, again, you see how it gapped down below 50-day moving average, and it was resting. So I said, okay, buy puts, because it gapped down below 50-day. When the stock gaps down on a 50-day, below 50-day moving average, that's pretty good signal to go short. You don't need any indicator to tell you not to go short. If you go short and you're wrong right here. If it reverses up, you're wrong here. Otherwise, you are correct in going short. And this is what happened. You see how it gapped down below 50-day, and then boom, 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 it just crashed. So 50-day moving average and above is considered bullish. Below 50-day is kind of bearish, but ultimate bearishness comes below 200. So you would be wrong. You would be too late if you want to wait for 200-day moving average to break. It would be too late. So it's in a bearish territory, but this is where the entry came. Go short right away when the stock gap. So if you can implement strategy, you can implement stock gaps down, and the stock is trading below 50-day moving average, and the stock was trading above 50-day moving average yesterday. So you can just do this program. The stock gap down, that's your first criteria. The stock was trading above 50-day moving average yesterday. Today is trading below 50-day moving average. Set that up, you're done. Grub. So I prepared the chart grub. I don't have any position, but I want to show you that again, these tiny candles telling us that there's an exhaustion going on. So grub can easily fall. So I prepared on 19th of March, and this is what's happening. So it's drifting lower. So grub can easily fall right here, 90, 50-day moving average. And then there's a big window here. So window open, window can be closed, and window can be closed at 70. So watch the window. It's right here. It can all the way it can fall to 70. So keep an eye on grub. Goldman Sachs. So this is what I don't know if I showed you the chart. This is Goldman Sachs. So I identified Goldman Sachs. I didn't trade anything in GS, but this started showing that it wants to go down, and this is. I didn't trade because 50-day was here. I said, okay, only 3 points left. So who knows? It holds 50-day, but it did not. It just crashed through. So again, you see this gap down below 50-day moving average, then boom. So if you can catch this move below 50-day, you could have caught this move. So 240 is the target, easy. And 240 right here coincides with this low of hammer. IBM. So IBM also, after moving up, is showing the same thing, coming down. So 20th March, and this is what happened, gap down. So when the stock gaps down on a bearish day, you need to go short. If the market is also bearish, that's a safer trade to take the trade. And if you see 200-day moving average below, that's your target. So 200 days is the target. So it's right now it's sitting here. Same thing with LVS. So on LVS day, when I look at, so I saw this little gap on LVS. I said, oh, LVS gap down. Let me immediately I flip to win. You have to flip to other stock in the same category when one stock is showing you the sign, because the problem could be only with that stock. It could be temporary, but if the other stocks are also giving you the same, then something is wrong with that sector. So I flipped at Win, and Win was also showing downward move. So I said, okay, which one to take? So I went for LVS. We bought puts, and this is what happened. You see the gap down, then gap down 50-day, and boom, dropped. So how I caught LVS? Gap down first. I look at it. I said, oh, it's gap down. I flipped to Win. I said, okay, Win is also going down. Which one to take? I said, okay, I'll take LVS, and this is what it did. So that was my thought process of taking LVS trade. So we have been holding puts. Now we don't have any. So we were holding M. Retailers were crashing and all that, bad news. So we bought M and GPS. GPS puts we closed earlier, but M was still holding its ground. So you see the back and forth, back and forth, back and forth, and finally it crashed. So it gave up. So now we exited because again, 50-day moving averages could act as a support. So after all this choppy move on the side, and this is where the profit is, we need to take the profit. Otherwise, we will regret. If it is, let's say, it starts moving, we will regret. After all these waiting, and then we didn't take the profit. And since the window open, window closed, window got closed. So window always gets closed. Sooner or later, the time comes, window gets closed. So if the way to determine the target is to look for the window. Window got closed. MMM. So this was the pen information. I posted the chart on my private Facebook group, and I was watching this MMM is saying, okay, which way it goes. It should go down, or it can fake and move up. So it broke down, and we bought the puts, made money on MMM. This is what happened. Look, the crash came. So this was the formation, and this would happen, drop. So you see this chart, this is stock, it broke 200-day moving average, no support. It just crashed through, even crashed through this supported hammer. So there's no hard and fast rule in the stock market that this will happen for sure. No, nothing. Anyone wants to sell, they will come and bring the market down or stock down. If they want to get out, they just get out. They don't care. They don't care about this hammer or this 200-day moving average or 100-day moving average. They don't care. So you need to just follow the stock. MU. So big boys bought. I've been showing you MU quite frequently. So we were long at this level. You see how they came right here. So they only the deep pockets, the dinosaurs, they can move the stock up. Me and you cannot form. Even like right now there are about 140 people attending this webinar. If we combine all our money and try to move MU, we wouldn't be able to form this hammer. If only we are allowed to say nobody else will buy, and we put all our money into MU, we won't be able to form this hammer. So only the deep pockets. So they bought here, and MU just kept going with earnings and all that, and finally it reached the top. So this is the stage 3. This was the stage 1. This was the breakout, stage 2, right? We discussed. So stage 1, stage 2, keep going, and finally reached stage 3. And this is what happened. So this And this happened when you see this kind of candle, you need to go short. So you need to go short. I sent the alert to buy puts, and then it starts to move up. And then there was one member, he sent me email, oh, should I get out of the MU? So the thing is, we don't get out like that. So MU is short, and this is what the candle formed later near the market close. So I took another screenshot. So you see, this was forming at 9:43, and this is formed at 3:37 Pacific. So it formed this bearish candle. It can easily fall to this 50-day moving average. So 48 is the target. It can fall right here back to 30 or 39.74. So the cycle will complete. Cycle is started here. Cycle could end here. It could end here too. So who knows where it will end? It can come down here. You never know. It can come down here 25. We don't know where MU will end. But right now we know it's coming down. We know that this was the signal to buy. So what it will do, we don't know. We know the stages, the stop points where the stock can halt. It can halt here, it can halt here, it can halt at the low of the hammer, or it doesn't stop anywhere. It just keeps crashing down. God knows where. This is NEM. So gold. So I was watching NEM. So on 21st March, I spotted this, and this is going on the sideways move. So I said, okay, NEM, I need to watch. I don't have any position, but I posted the chart that NEM could go up. And this is what happened. NEM is trying to break through. So this high is the resistance. Once it breaks this high, NEM should move up. So to this white space. Only this candle is the resistance level. But this is kind of minor right now because time has passed. It's not a recent. So this is the 41 level is you need to watch. And here, right here, 39 level. Once it crosses 39, NEM can go higher. NVDA. So NVDA has a strong resistance of 250. It's obvious right here, right? So if you are a trader, when you look at this chart of NVDA, you should say 250 is the ultimate resistance. It just cannot break 250. So when the stock tries to break and cannot break 3 or more times, chances are it will come down. So NVDA broke 50-day moving average. It can easily come down to 220. So NVDA watch coming to 220. PayPal. So we traded PayPal, same thing. It's the same kind of recipe. You know, you go to restaurant, you order chicken biryani, they give you chicken biryani in 10 minutes. You order mutton biryani, they give you mutton biryani. You know, you can order any kind of biryani, they cook that for 15 minutes. For me at home, I cook, suppose mutton biryani, it take me 4 hours to cook because I'm putting everything. So this is that kind of recipe. Chicken biryani, mutton biryani, it's all same. They just put the meat. So it doesn't matter if it's a PayPal or what. If it breaks 50-day moving average, if you think it's not gonna bounce back up, you go short. So this is chicken biryani right here. It broke. So we said, okay, we need to go short. It's common sense. And this is what happened. So common sense makes money. Broke 50-day moving average, comes down, bearish candle. Okay, you can wait. If you're really greedy, you can wait for this candle to touch this line or wait to break it and see what happens. But if you want to take quick profits, this is it. You get out. Once it breaks the 75 line, then you can decide, okay, I want to go take the short again. Just watch this support right here. And you can ride it all the way down to 69. So this is a quick move, 50-day break, go short. Okay, so STX. So you see this date, 23rd March. I prepared the chart early, then I deleted that. And then I said, okay, I'll prepare another one. So now WDC and STX, they were both coming down. They belong to the same category. So you need to know, okay, same stock. So when I saw WDC, it was moving down like 5 points already. So I shorted it, didn't buy the puts. And I looked at other stock and same, I said, what is STX doing? I said, okay, holy cow, STX is coming down. So after 3 back-to-back doji, this is a very bearish setup for STX. When you see this kind of setup, is really bearish. So I'll send alert to buy puts. Hopefully we'll make money. It's coming down to this 53 level. If it breaks 53, it easily can come to 48. So SPX is very bearish. If you look at WDC chart, it's really bearish. SWKS, 19th of March, I posted this chart on a private Facebook group. And so based on this, it broke, it's breaking this support. So SWKS is short. And this is what the way the trade developed. You see that? So how the trade developed. This is what happened. This candle breaks the support. Market is bearish. Go short on SWKS. Just a little bit. You don't have to. The trader, they make mistake. They just jumped in with, I want to buy 1,000 shares. I'm a big boy, and then they don't have any money left to buy even one share in that stock, or they buy 40 contracts. Okay, I'm gonna buy 40 contracts, and then they don't have any money to buy any additional contract. That's not the way to trade. The way to trade is you just initiate with 1 or 2 contracts, just test the order, and you see, okay, so at least you are in that trade, you are watching it. You just buy, like, suppose 2 contracts, and you say, okay, I'm going to test this SWKS, looks like bearish. Then when you see this drop coming, then you say, okay, I'm going to buy more puts. So you add more. Then when you see this, you say, okay, I'm going to buy more. So you keep adding it. Suppose 1 contract, 2 contract, 1 contract, 2 contract. Every time you buy new, the new is making more money than the because it's going down. So you are, as you adding it, it keeps making you money. The last one, the last 2 or 3 you added, that's the one which will not make you money, because you ended up, music stopped. So when the music stopped, you're left holding those last contract and not making money. But when you added up all your average cost, you accumulated a big chunk, and then you know your average cost and you know the current price. So you have to know the exit, and then you exit. So this is the crash happened in SWKS, you see. And another way to look at this stock, you need to check the Apple also. So Apple and this go together. So if you want to go short on this, you check Apple also. You say, okay, Apple is going down and this one going down. This becomes a no-brainer that you need to go short. And it broke. You see, we can talk all day long that 50-day and 200-day is a strong support, but when the stock wants to go down, it just goes down. So when 50-day and 200-day moving average are closer, it's considered a strong support, but it didn't happen. All things can go to hell. This is where it can come down, 95, 96 level. So it all started with this one big candle bearish, and everything just fell apart. UAL, so airline, looks like it's coming down. So I went short on UAL, and if 200-day moving average breaks, then it can just fall. This blue line is just a temporary. This is the line. This is my line, right? This is not the stock is telling us that I want to halt. This is Noshi telling you or thinking that the stock can halt here. So this is Noshi's blue line. There's nobody's line. The stock doesn't know Noshi drew this line here. It doesn't care. I can just erase this blue line and there's nothing here. It can just easily fall here. So support is right here. It won't care because I think a hammer is there that it should stop. No, it says, no, I'm gonna go down further. So it can go down further. So this is what the stock is doing right now. It broke 50-day moving average. UNH. I spotted this. I didn't take action. I said, okay, I'm gonna just watch it. There are some stock which I just watch, and for learning purposes. So even though you're not trading, you need to keep on learning. So keep on preparing charts, keep on doing your analysis, even though you're not trading that stock, to refine and fine tune your skills. So I said, okay, 21st of March, I took the screenshot and I said, okay, this looks like a bearish setup, and I will watch what UNH will do. And this is what UNH did. So I regret now. It just fell. So when you see this kind of candle, you need to go short. What are the chances that it will go up? Chances are low. If it goes up, you need to exit. If it goes violates 229, you just exit. but this is what happened. Now 207 is the support. 200, yes, 200-day moving average. VIFs, I don't have any, but it looks like this candle telling you it's bearish. It's breaking this support. So watch 50-day moving average break. You need to immediately go short if it gaps down or penetrate 50-day moving average, like 50 cents, 60 cents. You need to go short on VIPS. Oh, okay. So it's sitting right here. So this chart I prepared on 22nd of March, Thursday, and this is on 23rd of March. So it's right here. Okay, so why this doji formed? Because we know 50-day moving average is the support. So somehow somebody's algorithm kicks in and they are supporting it, right? 50-day moving average. But then somebody else algorithm can kick in and they can come in with 10 million shares order to sell. So all this guy's algorithm will go on the side. He will also sell when other guy takes over with, like, suppose 10 million shares order to sell. So all these guys who buying at this $17, they will also start selling and exiting and join that seller who's selling millions of shares. So it can easily collapse. VLO, again, another oil chart with COP, and we traded VLO calls on a bearish day. We made money. So again, you see the VLO. So VLO, COP, CVX, they are moving in tandem. So you just choose your stop. So I was comfortable with VLO. This VLO did moved up. WIN. So WIN prepared the chart on 20th March. So this was, it looks like it's a bullish. It's trying to go up after 2 days of fall. So I prepared chart. I said, okay, maybe I need to go long on WIN again. I didn't go long and it collapsed. So WIN collapsed and the LVS. So I chose LVS. I didn't choose WIN because of this. I said, maybe I shouldn't go short. I will go on LVS. All right, so this is the Dow Jones. I will explain the charts of market. Market is really bearish. The only thing left is this February 9th low, which is at this level. So some February 9th low for some indices are further away from the current level, and some are very closer. So for us to know what the stock could do, market could do, we need to start looking at those indices which are closer to 200, either 200-day moving average or the February 9th low. So it can easily go both ways. Right now, the market can go both ways. Can hold support at these hammer levels or can easily collapse and break this 200-day moving average. So I'll show you the charts one by one and explain to you what's going on. So, okay, yeah, so this is 23rd, so this is the 22nd March candle. So this is 22nd. And this is what, okay, so this is 23rd March. So now there's a double support for Dow Jones. The support is 200-day moving average, which will, if it breaks, it will be really bearish. And this low. So on Monday, Tuesday is very critical day for us to watch what could happen. There could be a final, final climax kind of move down, flushes out, breaks 200-day moving average, and then bounce back up. And same pattern can happen like this hammer, or I mean, it can easily break this low and come down. So when if it breaks this 200-day, it can easily come down further. Where nobody knows, it can come down to 20,000, right? So it can go down to the election level, November 2000 what? So 16, it can easily go there. This is SPX. So SPX is further from right now. It's 22nd of March. So SPX is right sitting at 20 to 200-day moving average. So it's there. The thing which I feel that it will break, because the way the candle is sitting is very bearish. It did not come down as a like dwindling little candle. It's not little, it's a big one. So there could be another sell-off on Monday, and easily 25, 25, and 2500. We can easily see S&P coming down another 50, 70 points. So this is the line in the sand. 2500 is really important that this should hold. Nasdaq was sitting on 50-day moving average on 21st of March, and then it gapped down. So this is really bearish. Gap down 50-day and time down and sitting at this support, right at this support. So it can easily break on Monday, Tuesday. It can easily break to 6250. So 6250 is the key for Nasdaq 100. Russell is doing the same thing, sitting right here. Russell 2000 hammer is way below. So Russell is way far, and so I would watch S&P because S&P is sitting right at 200-day. So this one is for me, this one is the main index for Monday. I would have to watch S&P, what S&P is doing. Is it holding this? And the way the market moves is intraday reversal comes. So let's say the market moves down on Monday, nothing happens. Then on Tuesday, intraday reversal happens, or the future reverses at night time. And the futures are moving up. They hit some critical level, so you need to watch S&P futures. And they may hit overnight on Monday, Tuesday night, and it reverses up. So by the time Wednesday comes, the market is moving up and then it reverses upward. So Monday, Tuesday is very critical. Now, I don't know how many of you believe in astrology. I'm not supposed to believe in astrology based on my religion, but when it comes to stock market, I see things happen based on astrology. So based on astrology, the stock market is supposed to bottom on March 28th. So you can say whatever you want to say. I'm just telling you, expect, based on astrology, expect stock market to bottom on March 28th, which is Wednesday. Now you can give a 2-day plus and minus. So both sides like a deviation. So plus and minus. So starting Monday to Friday, the stock market, this is the period where the stock market is supposed to reverse its trend, not bottom or top. So whatever the trend is, it needs to supposed to be reversing to the upside, other way. So right now the trend is to the downside. So if the trend is to the downside, the stock market is falling into that date, the chances are the stock market should reverse. So that's what we expect. And the date is March 28th. So it's based on the planet's moves. So March 28th is the date. If you add 2 days to the left and 2 days to the end, after 28, this is the time band of Monday to Friday. So starting Monday, anything can happen. Market should reverse to the upside because market is falling. So keep an eye on March 28th. I don't know, any news can come. So if you see the market reverse on March 28th, tell the people they know she told you. All right, so let's see what's next. Okay, so support based on February 9th lows. So these are the 9th lows on February 9th. So I wrote down the point. So the lows are February 9th lows. The SPX made a low of 25.32. So right now it's 25.88. So look for this to hit and the market reverses. And if it's hitting very close to March 28th, then it's even better. So these are the February 9th lows. You can look at it. You don't need my numbers. It's right on the chart. You can just hover over February 9th and then note down the numbers. So it's not difficult to look at. So the nearest support is for Dow Jones. So Dow Jones is the one which is sitting very close to February 9th low. So this is one index you need to watch. And the next one is XPX. Russell is far and Nasdaq is far. So Dow Jones and XPX. Now, based on technical analysis, the end of bull market, if these are broken, so this is very key. So the end of bull market started in 2009 in Nasdaq 100. These are the key levels: 5867 for Nasdaq, SPX 2500, Dow Jones 23436, and Russell 201397. So these are the important. This is my numbers. This is not anybody's number. So you can read some other newsletters or what the other people are telling you. But these are the numbers very important for the bull market to remain. Otherwise, I don't know what will happen. It can keep going. XPX can go 2250 if 2500 is broken, or for March 28 is the date for reversal. So March 28, we could see the market move, give and take 2 days on this side and 2 days on that side. So March 28 fits right on the middle of the week, which is Wednesday. So another clue I give you, watch some news to happen, some positive news to come out. And that news, the people on media will attribute the reversal of the market to upside based on that news. So some event comes, positive event, which drives the market up. Reversal takes place sharp. So an event will occur, hopefully, which makes the market reverses. So they will attribute the move, positive news, based on the event. But you already know March 28 is the date. So look for the event news to come somewhere on Tuesday or Wednesday morning. So that's all I can say. And next Sunday, we will cover whatever happened, we will know. All right. Yeah. And the last slide, long-term upside target. So my long-term upside targets, on the other hand, I've been telling SPX target is 3120. So Dow Jones 31,000, Nasdaq 100, 7,500, and Russell 1870. So these are the long-term targets. So on one side, we are right at the bottom, at the critical level. Anything can happen. And on the other side, these are the long-term targets for market. So who knows? Only God knows what the market will do. Nobody knows right now. So these are the long-term targets of mine: SPX 3120, 7,500, 31,000 Dow Jones, Russell 1870. So these are for 3-year target. End of Donald Trump's next election. So by next election, these are the target long term. All right. I do have a $17 trial for my swing options. If you're interested, send me email. You should be having my email address if you are in my webinar. I don't need to tell you. So send me email. I'll send you the link for $17 offer, or you can easily go on this page called Swing Options Trial Offer and take the trial. I do have a coaching program also. If you're interested, send me email and we will talk for 60 minutes, sometimes 75 minutes, sometimes for 2 hours. We just keep talking about the program. And one batch is already on its way and we are having fun. And instead of 6 months, it could go on for 9 months. I don't know how much material I would cover. And I think I won't be able to cover in 6 months. I have too much to teach, so it may go on to 9 months. So the first batch is already started and it's in full swing. So it's too late to join the first batch. If you're interested in second batch, you can send me email and we talk about it. All right. So next one webinar is on April 1st. I hope it's Sunday. If not, it is on Sunday. All right. And FB, I thought it will bounce from 162. It did not. It break. So it could easily go to 150. So FB can easily go to 150 if it wants to. Otherwise, it should bounce above now. For me to say that FB has made a comeback at this moment, it needs to go above 164. 10 or 154 15. Amazon support is 1444. So Amazon is very close to the support. So if you're long Amazon, 1444 is the support. I checked before. Apple support 162. I showed the chart. What else? Oil is rising from a missile being shot down. Okay, I don't know which missiles I need to read. I don't know about futures. Let me see what the futures are doing. Futures are up right now, 80 points or so. So futures up. So future right now doesn't mean anything. The market is green. right now, but it can overnight, it can change. So the market doesn't bottom like slow. Market bottoms on on some climax, some major happens, some event, some news comes out, and the market makes a U-turn. Markets a bottom or take a reversal overnight in futures. Market takes give you signal of a reversal intraday. The market is going down, and then some news comes up positive, and the market reverses, and all the stocks just rocket up. But 4 or 5 point, Apple, Boeing, Caterpillar, they just up 4 or 5 point. That's the key for knowing that the market has bottomed. So you need to watch that kind of reaction, not just like 80 point up futures. It can easily, by the time you wake up, it's 80 point down. So, um, astrology, this astrology came from Egypt and India, and I'm not supposed to believe in based on astrology or fortune tellers or I'm not even supposed to ask about my future life to any fortune teller, and I don't ask anybody. I do read from time to time what will happen to me, and no report has come yet that I will die, so I'm happy. But I believe that these financial markets are affected by the planets. So whether you believe it or not. So based on that, I'm still studying, and one day I will be able to teach you. I'll be able to give you a webinar. I may even form a course. I'm still learning. It's very complicated field. It's not easy because you need to understand all the signs, all the planets. There are major planets which affect starting from Earth, Sun, Moon, Uranus, Pluto, Venus, Jupiter, Saturn, all this combination, and then it tells you what date the market can make a reversal. So whatever the market is doing, it does the opposite. So March 28th is the date. So and the market reverses, some major news comes out, whether negative or positive, and then it reverses. It doesn't reverse like you know. So something will happen. So now Dow Jones is up almost 95 points. Facebook can go down easily to for 150. Tesla, I don't want to touch it. Dropbox, I don't know about Drop. I don't trade IPO. It's very hard. How do you know? Only if you have access to the internal reports or major brokerage report and they tell you to buy it and they give you the reason and you trust them, then only you buy IPO. Otherwise, Dropbox open at 29 plus and I was watching it went to 31 plus. So open at 29 plus, you could buy suppose, and it can go to 20 or it went to 31. There is just one bar. If you look at the chart of Dropbox, it's just one straight line. So how do you know where it will end? So I don't want to touch these kind of stocks because I can lose my shirt. It can easily go to 15, 16. So at least 2 years of data is needed to trade the stock successfully. So I don't try to go into IPO, etc. So I don't trade Dropbox. So, all right, so that's it. If you have any other question, let me know. Send me email and look for that clue. The clue is some major news comes near March 28th. All right. Thank you very much. And I'll see you next Sunday. Thank you for coming. I love you all. Bye.